All right, good morning, everyone. We're going to get going. All right. Overnight action in the States. Obviously, a little bit of a bounce back from the previous day's pullback. Same sort of thing, very muted, not a whole lot of volume. Just kind of really felt like it's just purely drifting the whole day, not a lot of impetus either way. But I think what we have been seeing is we have been seeing some of the tech companies that have come in and been reasonably consistent. We've seen Microsoft beat now, we've seen Amazon beat, we've seen Google beat. So we're starting to see that theme unwind a little bit. What's interesting is, a lot of these expectations that they're beating are downward revisions from what the previous expectations were. So, you get someone like Amazon who comes out and makes a beat on revenue. The share spikes over 5% after hours, but they actually made a loss in the quarter, and they've had a loss 3 out of the last 4 quarters. So hard to see how that thing's making all-time highs. But bottom line is, the guys are loving the tech sector right now. That's what people really wanting exposure to, and I think that's one of the reasons why we continue to drive higher. If I could throw that out as what we can watch for one of the best leading indicators in our market right now is probably going to be the NASDAQ. So you can see yesterday the NASDAQ kind of still leading the charge for the most part, up about 0.5%. That's really, I think, one of the best leading indicators we've got in the market, better than any of the commodities or the currencies or anything of that nature. It's more the NASDAQ, I think, that we can watch to see if this market does start to turn to the downside. I think it'll have to be led out of the NASDAQ. All right. Sorry, I skipped over one. Asia, you can see that we were down mostly across the board. We had Nikkei actually that fell over 2%. It's actually down 2.75% at the moment. We also have Shanghai and the Hang Seng that are down a little bit. We've had the yen that's continued to kind of gain strength there, and there's some worries out of Asia. There's a little bit more chatter coming out about China. People a little bit worried about China and the borrowing rates going higher. People, I think, are just nervous. There's a lot of talk that by the central government there, going to some of the local governments and telling them they need to be a little bit more realistic with their forecasts, that they're kind of preparing to guide growth down to 7% from 7.5%. And I think that. I think that's something that is going to happen regardless, but it's a matter of when it happens. I think it'll be a negative for the market, and the market's starting to look at that as a real possibility, and I think it's starting to overhang Asia a little bit. So we're really starting to get the separation between Asia and the East at the moment. So I think this is one that we'll see who wins this battle rather quickly, I think, but there's no way that divergence is going to continue to remain for too much longer. All right, we had, like I said earlier, we had a couple of the big techs out last night, Amazon and Microsoft, that came out. Earnings per share for Microsoft was a beat by 8 cents. Revenue was a nice beat as well, almost by $1 billion. The share got a nice move up after hours there, I think. And then we had Amazon that was in line on the EPS number, down a loss of 9 cents per share for the quarter. And the revenue numbers at $17 billion versus expectation of 6.75. So it didn't actually even have that big of a beat in the revenue number, but the stock still managed to pop over 5% after hours. Just incredible how it manages to kind of rally regardless. Okay, we have Samsung out this morning, quarter 3 net income numbers at 8.05 trillion won, expectations of 7.94, so nice little beat there. Like I said, the techs keep coming out and keep beating. We got Procter & Gamble that is out this afternoon along with UPS, and then Mail.ru later as well. So just on other corporate action, we had the AMCU, which got permission to strike at Impala Mines after a mediator failed to resolve a deadlock over wages, and they'll meet with members about their pay on the 28th of October, so all the way till Monday. So it looks like that could be on hold until then. All right, we have the national CPI out of Japan earlier. It was a little bit better than expected, or a little higher than expected. So the CPI number is a little bit hotter. We have the IFO business climate numbers out of Germany at 10 o'clock. That one's definitely a good one to watch. Retail sales out of Italy, money supply out of Europe. We've got GDP out of the UK at 10:30. Then we got durable goods orders in the States, Michigan confidence numbers, and wholesale inventories later at 4. All right, let's jump into the maps. We've been a little bit more chart heavy the last few days than we will be today, just because there was so much happening yesterday. There wasn't a whole lot that actually happened, so a little bit less to look at today. But when we look at spot gold is the first one I want to look at. I mean, this is a monster level here at 1350. You know, we had talked here about real head and shoulder, and when we dropped this level here, breaking down out of head and shoulder. But I mean, when you look at it in hindsight, the right shoulder was never really well formed, and to me, this is almost kind of looking as if it's potentially could be entering into a head and shoulder here, with the shoulder being making a nice shoulder right now at 1350, and then we could be dropping what this would be the neckline. So I'm still a bit cautious. I'm not, until we can get above 1350 on a closing basis and a nice move there. I don't really see us being able to call this a breakout. So just be careful on this one. If we can't break above 1350, I think the gold price will probably correct. And to me, the pattern will still remain quite bearish. So just watch this one closely. All right, ABSA, just wanted to show this as we're kind of coming back down to some sort of support levels. Definitely support here at 150 Rand. You can see there, that's definitely one level support. There's also, I mean, you could call this some sort of support as well here, right around 152. We dropped that yesterday, but only narrowly, just below 152. I think where that close was up in July. But I think somewhere in there is kind of our risk range, where it might be worth it to have a nibble here. Obviously, we got a big divvy coming in November, and there's some sort of support here. Plus, it's been one of the better sectors over the past few months. All right, Sasol yesterday we had a nice bounce off of support down here around, call it 93.5 to 94. You can see there we really wicked down to that level on the day. We spent a lot of time actually trading around 494, and then we bounced up to close north of 500 on the day. That's, if we get down there again the next day or two, it's probably not a bad place to have a nibble, especially if you're looking for some exposure here in the resource sector. This has been it was a nice little breakout here, and we didn't get any closes below 500 so far. So just watch this one. I wouldn't be surprised to see us get a retest of it in the next day or two. All right. Let's look at Aspen. Aspen came down yesterday again to test the bottom end of this of support at 261. We closed right at 261 yesterday, and we're kind of forming a bit of a descending triangle here, or a little bit of a flag, but either way, we know that support is quite clearly here at 261. I would actually wait, because some of the wicks are down here around 60. I would wait to see a break below 60 before I would even entertain a short on this trade. If we do get below 60, what I like about this chart is it's just so clearly defined, the levels. So if we get below 60 and can hold down there for a while, I think that we could correct all the way back to 240, which I think would be a great entry for the long term, and one of the strongest stocks on the board. All right, let's look at Able again real quickly. Same sort of thing as Sasol yesterday. Oh, sorry, not Sasol. A little bit different than Sasol, because it actually dropped what was support, but we regained it toward the end of the day on a closing basis. If we shorten up here, right at 1690, I think there yesterday, let's see where we traded down to 1637 intraday. We actually spiked all the way up to about 1720 just before the close, and I think they closed it down about 10 to 15 cents in the auction to close at 1690, but we did hold support nonetheless. I think we're still nicely set up for a break higher if we can continue to hold 1690 off of this flag. So we'll see how that plays out the next day or two. And the last one I'll show will be BBY in London, setting up for a nice little continuation play. Could be a breakout here. Obviously, if we don't get above 285 in the next day or so, it could end up looking a bit double topish. But if we can get above 285 on closing basis, I think we can make a quick move up to about 315 or 310. And that's it for today, guys. Thanks a lot.